Hi friends, myself Subrata Mukherjee and you are watching my channel Dr. Subrata Mukherjee Distance Learning in Commerce. Today I am going to discuss another problem on departmental accounting. This is lecture number 4 and you can see the other lectures of this chapter in the playlist section of the channel. I would like to request my students to write the problem with solution in your notebook, and if you find any difficulty in understanding, feel free to contact me through email at the contact number given in the description box. A Limited has 3 departments X, Y and Z. From the following particulars given by A Limited, compute A, the value of stock as on 31st March 2021 and B, the departmental results. So we have 3 departments X, Y and Z, and the opening stock on 1st April 2020 we have 48,000, 72,000 and 24,000. Purchases during the year is 2,92,000, 2,48,000 and 96,000. Actual sales 3,45,000, 3,18,800 and 1,49,200. Gross profit on normal selling price is 20%, 25% and 33.1/3%. During the year, certain items were sold at a discount given below, and these discounts were reflected in the values of sales stated above. For department X, Y and Z, sales at normal price is 20,000, 6,000 and 2,000, and sales at actual price is 15,000, 4,800 and 1,200. For this, we have to prepare 2 small workings. So first I am doing the working and then I will prepare the departmental trading and profit and loss account. So this is working note number 1. So what is calculation of discount? So we have 3 departments X, Y and Z. So sales at normal price is rupees 20,000 for department X, 6,000 for department Y and 2,000 for department Z, and less sales at actual price. We have 15,000, 4,800 for Y and 1,200 for Z. So the departments given discount for rupees 5,000 for department X, 1,200 for department Y and 800 for department Z. Now my second working will be calculation of gross profit. So again we have 3 departments, so X, Y and Z. What is the actual sales? This is 3,45,000 total sales. Actual total sales is 3,45,000, 3,18,800 and 1,49,200. Now we have to reduce the amount of sales, that is sales of discounted items at actual price, which is 15,000, 4,800 and 1,200. So from the actual total sales, we have reduced the 3 sales which were made at a discounted price. So we have 3,30,000, 3,14,000 and 1,48,000, and we will add the sales of discounted items at normal price. So which were 20,000, 6,000 and 2,000. So therefore sales of the three departments at normal price is 3,50,000, 3,20,000 and 1,50,000. So alternatively, the same calculation can be done. So I am also showing the alternate calculation. So for the purpose of calculating the gross profit. So the three departments X, Y and Z. So this is the alternative method for the same calculation, the small calculation that we have done here, that is the sales at normal price. So we have the three departments X, Y and Z. So the actual sales, we have 3,45,000, 3,18,800 and 1,49,200 at the amount of discount given. So we have already calculated the discount in working note number 1, and 5,000 was the discount for department X, 1,200 for department Y and 800 for department Z. So what is the amount of sales at normal price? So we have 3,50,000, then 3,20,000 and 1,50,000. So you can see in working note number 2, here I have done the two method that I have followed here for the purpose of calculation of sales at normal price. So in table 1, we have actual sales less the sale of discounted items at actual price. Then we have to add up the sales of discounted item at normal price to arrive at sales at normal price. Alternatively, the actual sales at discount. So discount we have shown and calculated in working note number 1. So sales at normal price we have calculated for department X at 3,50,000. Sales at normal price for department Y is 3,20,000 and sales at normal price of department Z is 1,50,000. Now what is the GP rate? So GP rate is given for department X is 20%, 25% is the GP rate of department Y and 33 1/3% is the GP rate for department Z. So gross profit at normal sales price, 20% of 3,50,000 is 70,000. Then 25% of 3,20,000 is rupees 80,000. And 33 1/3% of 1,50,000 is 50,000. Now gross profit at normal selling price, but the company has given a discount. So we have to reduce the amount of discount. 5,000, 1,200 and 800. So your actual gross profit this is the actual gross profit at actual sales price. So this is 65,000 for department X, 78,800 for department Y and 49,200 for department Z. So this is the second part of the question. Point number 2, that is we have to calculate the gross profit, actual gross profit, that is the gross profit at actual sales price. I have prepared the structure of the departmental trading account. There are 3 departments. On the debit side I have written X, Y and Z, and on the credit side I have written X, Y and Z. So we have the opening stock. We have the opening stock for rupees 48,000, 72,000 and 24,000. These are the opening stock as given in the question. Then to purchase 2,92,000, 2,48,000, and 96,000. We have calculated the gross profit in working note number 2 at 65,000, 78,800 and 49,200. We have the sales. These are the actual sales. 3,45,000, 3,18,800 for Department Y, 1,49,200 for Department Z. 4,05,000 is the sum total of the debit side. 3,98,800 sum total of the debit side for Department Y, and sum total of the debit side for Department Z is 1,69,200. So the balancing figure in the credit side will give you the actual amount of closing stock. So closing stock for Department X is 60,000, 80,000 is the closing stock for Department Y, and 20,000 is the closing stock for Department Z. It is given in the question to find out the closing stock for the department. So this is part 1 of the question, and part 2 is the trading result for the 3 departments. Hope all the students have recorded the questions with solution and followed the way I have done it here. If in spite of this, if you find any difficulty in understanding, feel free to contact me through email and the contact number given in the description box. Thank you. Thanks for watching the lecture.